None of us like spending more money on insurance than we need to. So I'm just going to share some quick tips to check on your policies to try and save yourself some money. So first up, if you used to be a smoker and you've given up for more than 12 months, check that you aren't still paying smoker rates for insurance. This could save anywhere between 25 to 50% depending on the type of insurance it is. And it's really simple. All you need to do if you haven't smoked for the required time, so 12 months, is sign a statutory declaration confirming that is the case. Secondly, medical insurance. Check if you've got an excess and how much it is. If you currently have no excess, adding one that's about $500 could save you potentially around 25% of your premiums. And if you make it $1,000, it could be up to a 35% saving. Number 3, loadings. When you apply for insurance, depending on your health, you can get these things called loadings. They're basically an added premium that you pay because you're deemed a higher risk to the insurance company, and these could be because of medical reasons. These can be reviewable over time as things change. So a really common one can be due to weight. So if you've lost weight, you might well be eligible to review the exclusion and again saving you some money. And this could be 50 to 150% of the premium. Number 4, exclusion. So this isn't a money saver, but it's really important to make sure so that you're covered for everything that you should be. So similar to a loading, but instead of increasing the premium, an insurance company might just decide they aren't going to cover a certain pre-existing health condition. Sometimes these are permanent in the case of like a chronic condition, but often they're a temporary thing that's happened that you've got an exclusion for. The catch, you need to physically review these with the insurance company. They're not just going to remove them. Number 5, waiting periods. So on income protection, you can have a waiting period, similar to an excess, but basically it's how long after something's happened that you have to wait to start getting paid. The default option is often 4 weeks. By pushing this out to 8 weeks, you might save around 25%, and out to 13 weeks, up to 50% of premium. So obviously you need to be able to survive this long. But as time goes on and you hopefully start building up some emergency funds and some savings in general, it's definitely possible. Number 6, employer provided insurance. So some employers offer insurance benefits as an added benefit of being there. It is worth checking if it's the case, and don't discount it if they do. So what you can do is you can look to adjust your personal cover that you're paying for around the work cover, which saves you money. It's really important to make sure that if you do leave the employer that you can take it with you, and you actually do the paperwork at the time to take it with you. Number 7, pregnancy and parental leave. So this is only in some policies and some companies and things, but it's always worth checking. So this is a benefit that when you have a child, the insurance company will pay your premiums on the policy for several months. So obviously saving you money. Obviously worth checking if you're in that situation. Lastly, just review your cover. We come across so many people that took out cover years ago, haven't bothered to relook at it over the years, and now their life's changed significantly, like most of us, over a 10 to 15 year period. And often they're paying for things that aren't that relevant to them, and sometimes they're not paying for things that are relevant. Taking the time to check in on your cover from time to time can make a big difference to what you're covered for and what you pay for in the long term. Thanks for tuning in.